Welcome to Northwest Arkansas Investing Podcast, your go-to source for real estate investing in Northwest Arkansas.
Whether you're a seasoned investor just starting out, we bring you expert insights, market trends, and practical strategies to help you build wealth through real estate.
From buying and selling to property management and long-term investment planning, we cover it all so you can make smart, informed decisions in this fast-growing market. Let's dive in. All right, welcome back to Northwest Arkansas Investing Podcast. I'm here with my co-host Brian. And we've got an awesome guest today that we're excited to have on. To talk through one of our favorite episodes that we've done recently was kind of talk through last Skyline Report that dropped, and just talk through a lot of the data and what it looked like for Northwest Arkansas compared to the rest of the country, and macroeconomics, and then a little bit more into the microeconomic space, and just how resilient Northwest Arkansas is, and a lot of the drivers that we have going for it. And so the guy that really leads the charge there, Mervin, we're super excited to have you. So thanks again for coming with us.
Happy to do it. Yeah.
So, but yeah, we are, Brian and I both attended the Arvest Skyline Report. So if you haven't had a chance, listeners, get out to the Skyline Report and listen to Mervin chat through that, all of this data. But we want to get a little bit into the weeds here. But first, Mervin, tell us a little bit about you and kind of how you got into the space that you're in.
Completely by accident. So obviously I went to the University of Arkansas. I graduated, I was looking for a job, and I ended up at the center that I now run, and started out as a lowly research assistant, pretty close to the infancy of the Skyline Report. So the Skyline Report started in 2004. I started the center in 2007. So I've been around for the sort of joyride that is Northwest Arkansas in terms of the growth and changes that we've seen here in Northwest Arkansas, and sort of a change in the story in Northwest Arkansas as well. So 2007, this is, a year before everybody figured out the world is ending. Oversupply of housing to where we are today, a serious undersupply of housing in Northwest Arkansas. So I can say I've seen both sides of it.
Yeah.
Good, bad, and the ugly.
What a time to get into it too, honestly, with going right into that. I'd be curious to see what those Skyline Reports look like compared to now.
Yeah.
100%. Yeah. So, no, I think when people think of Northwest Arkansas, though, obviously they think about the Giants, the Walmart, the Tyson, the big movers here, JB Hunt. But I think, one thing I would love to, get your thoughts on and to chat through a little bit, which is obviously part two of the Skyline Report in general, but just the University of Arkansas and how big of a driver that has been for the area. If you look at the news, enrollment's at all-time highs, seems like every year now. But yeah, how do you see that kind of play a part in what's happening in Northwest Arkansas when you look at the rest of the country and the universities and, different cities around the country?
Yeah, I think that's, part of the story of Northwest Arkansas in that sense, that you see the growth in all the other industries as well, and you see the growth of the University of Arkansas as well. So just like the region as a whole has grown in population, the university's enrollment continues to go up, as you mentioned. And that's because the university is a bigger draw to students, not just from Arkansas anymore, and is a draw to students from other places in neighboring states and sometimes states very far away. They're attracted to what this region has to offer. So, they were in this region 20 years ago. They may not have chosen to go to school in Fayetteville, but now the region as a whole has amenities like many big markets. And so it is not, a college town in the sense that you have college towns in other places where you have the university, it's the college town, and there's nothing around it. So a lot of our competitor schools in other places are not in big metro areas. And so this offers attraction in that sense that you have the feel of a college town. So that part of it will still feels like a college town. But if you leave the college town, you have all kinds of great amenities, but importantly also jobs and a very strong economy in that region. So you get best of both worlds. You get to live in sort of a college town, but at the same time in a major metro area as well.
Yeah. Absolutely. I love that. And I think, obviously best place to live in the SEC, and all those kind of rankings continue to come.
Is that a thing? I didn't. Yeah.
Or it was either SEC or college in general. There's like a top 5, top 10 list out there.
Best team in the SEC.
Definitely does not say the best team in the SEC. We've been struggling on that front. But yeah, I think it's an interesting factor just in general. And one thing I'm curious about, you may not know the answer to this, but when I was going to school at the U of A, in-state tuition for people coming out of Texas, I heard that's gone away. Do you have any idea on that? This is kind of off topic, but just curious if.
Okay, so it's not just Texas, but most of our border states and then some other states as well. So, we have reciprocal agreements sometimes, but often it's just a way to attract students. So, we don't charge in-state tuition if they have a certain amount of GPA and ACT score. So it's not just anybody, but so we're attracting the best students from these places. So the higher your ACT score is, the more likely you're to get a discount on the out-of-state tuition thing. So I think you still pay maybe 10% even if you have some of the highest scores, but you can work your way up based on your score. So it's just a way to attract people to Northwest Arkansas that you don't want them to not come here because the cost is really high.
Yeah. And I was curious too, just with how enrollments continue to go up, if that's changed or if that's kind of continued.
That's a lever that the university can adjust fairly easily to increase or decrease enrollment. Mm-hmm. So obviously, the growth that we've had in the last several years, there's some infrastructure issues in Northwest Arkansas and on campus as well. So you can make it harder for out-of-state students to get here. You can make it easier for out-of-state students to get here. But at the end of the day, you might have heard this concept called the enrollment cliff, which is to say that there was that recession we referenced in 2007 to 2009. As a result of the recession, people had fewer kids, which means fewer 18-year-olds in general, which means the pipeline of students coming to college is decreasing nationwide, but that hasn't affected big state schools like the University of Arkansas because we're offering some attractive opportunities and we're attracting students from other places as well. So students from Texas, students from Missouri, students from Oklahoma, Louisiana, wherever else that are coming to Northwest Arkansas now.
That makes sense. No, I think we'll get back to more of what's happening with the university and everything like that. But I think we want to get a good look about what's happening macro-wise, the United States economy and even globally, what that's kind of looking like right now. Obviously, there's been a ton of change over the last year and things like that. And so would love to get just kind of a high level view of kind of how you're seeing it. Obviously, a lot of the topic of conversation for real estate investors is the Fed and their decision making and, how that changes the outlook for them as far as, rates and things like that. And so, give us a little bit of a high level view on, GDP, inflation, obviously, the Fed and what they've been doing lately. How are you seeing right now and what's changed over the last 6 months?
Yeah. So, we're recording this in the middle of a government shutdown. So the data that we have pretty much just goes to the end of August and, a little bit of September data. We don't have a lot of, up-to-date data. Which is a challenge for not just anybody measuring what's going on in the economy, but especially for the Fed, who need this data to be updated on a regular basis to be able to make good decisions. So you saw a rate cut last week. There is one more meeting for this year, and there's some prospects for what the rate cut might be at that meeting. That's entirely dependent on what the economy is doing. And right now, the Federal Reserve, if they go into that meeting without any data, would be making a decision in the blind, which you don't want to do. And so, what we know about the economy so far in the first half of the year is that it's slower than it was in the previous years. And that has largely to do with the change in policy as it relates to tariffs and things of that nature. So that's created a lot of distortion in the economy. It's increased prices for some businesses. So the sectors of the economy that are doing well at this point are you and I going out and spending money on doing things. So that would be going to movie theaters, going to restaurants and bars and buying concert tickets and getting on planes, going on vacations, going to hotels, all of these other things that are service sector parts that part of the economy seems to be doing fine because people with means are still spending lots of money on these things. And then the other part of the economy that's doing fine is technically a very small part of the economy, but has an outsized contribution to economic growth in the first half of this year, and that's the AI boom. So the investment in data centers and chips and all of that stuff, provided as much of an economic contribution in the first half of this year as you and I going out and spending money on concerts and plane tickets and hotels and restaurants and bars and everything else. So that's how much that sector has done. So that sector is not, does not have any tariffs right now. So obviously there's a lot of imports of chips and those types of things, and a lot of new data centers being built across the country, here in Arkansas as well, fueling that boom. But it's certainly a boom. People made a lot of comparisons to the dot-com bust and all of these things. And there's certainly on the equity side anyway, some concern about whether these few companies that are investing all of this money are going to make all their money back or not. I think it's fair to say that data centers, the investment in data centers, are going to be worthwhile investments. Whether this rush of equities coming into and the equity valuations based on that, I don't know.
Mm-hmm.
That has some frothiness to it. But the investment in AI is a long-term. We expect long-term growth from that. So that's not the issue. So those are the two sectors doing really well right now. AI boom. People with high incomes spending money.
That makes sense. It seems like, just looking in the news and if you're paying attention to what's happening in the housing sector, for instance, I know there's other sectors obviously that are probably not doing well either, but you see headlines like slowest housing market since the 1960s or whatever. I don't quote me on that obviously, but what have you seen nationally when it comes to the housing sector as of the last 6-12 months?
Yeah, you sort of have this weird squeeze in the housing market where sellers are not willing to sell and buyers are not willing to buy for related reasons. The mortgage rate is higher than it has been for a decade and a half at this point. So, 6% mortgage rate for most people, that are not millennials or younger seems quaint, right? 6% mortgage rate was normal, great. But for almost the entire adult life of millennials and then, the older Gen Zers, the mortgage rate has always been, under 5%. 4.5% was a bad mortgage rate in the 2010s. Right. So that's when most millennials came of age when thinking about buying houses. So the entire time they were buying houses, mortgage rates were at worst 4.5% or something, and now it's 6.5%. So that feels weird to people. And then a lot of people bought homes during the pandemic, and then mortgage rates were 3.5%. Those rates are probably never coming back unless there's a huge crisis. Housing sector, which we don't foresee at this point. So, those people are not willing to sell their houses because they don't want to pay so much more for a mortgage. And then home prices traditionally go down when mortgage prices go up. But that hasn't happened because we're working on a decade and a half worth of a shortage in housing in this country at this point. So home prices haven't come down either. So you have this weird squeeze where sellers are not selling their homes and buyers are not willing to buy at these high prices and high mortgage rates. There's lower inventory on average. But that's a national picture, not necessarily a picture here in Northwest Arkansas.
Right. And yeah, I think that's been really the story, is just how resilient Northwest Arkansas has been when it comes to the housing market. And so I know, you'll see also headlines out there, Austin, Texas, Dallas, Texas, Florida especially, and some other spots are seeing 20% cuts, 30% cuts. Although inventory in Northwest Arkansas, residential-wise, we're talking, is up. I think active inventory is up around 30% or maybe more to where we were last year. I don't think we're still caught up to what would be considered a healthy supply of inventory. So,
no, certainly not.
Yeah. And so I guess that would be what you're saying for the audience. What is, the fact that we still don't have enough inventory but we have the migration of people is what's kind of causing that.
Yeah. So our home prices are not going up in double digits anymore. And so the increase in home prices is still increasing, still going down. So the increase in home prices slowed to, mid single digits, high single digits. And then rent increases were going up in double digits as well. That has slowed a little bit. So the vacancy rate has gone up from, nothing to 3% for this market. So again, nothing crazy, but like, okay, well, it was close to 0 and now it's 3. Is that too high? That's still an extremely low vacancy rate for this market. But, most people listening to this probably on the investing side. Most people that are outside of this are on the buying side, and, lower rents and lower prices are great for the market because there are more buyers than sellers in general.
Absolutely.
And so there'll be a lot more customers at a lower price than there are today.
Yeah, that makes sense. So just wrapping up too on a little bit of the national economic outlook, what are you seeing as the biggest drivers the other way negatively on the economy right now? Obviously, we talked a little bit about the housing sector, but tariffs, obviously, which we'll get into. But
I had a question too we talked about some of the different sectors, about regions and some regions in the country. People are feeling like they're in a recession. Here we feel like we're still thriving, maybe a little bit of kickback, but I'm interested in your take on, regionally, like why some regions might be feeling like they're in recessions.
Yeah, so basically at this point, the economy in terms of economic growth is consumer services. So if you have a good mix of consumer services, you're doing okay. But anybody that's relying on other sectors of the economy, especially manufacturing, which counterintuitively we have all these high tariffs in the manufacturing sector, has seen job losses, closures, and so on and so forth, because the input prices have gone up significantly in those sectors. So outside of AI and consumer services, the other sector that has done well has been healthcare. So we've added a lot of healthcare jobs just because we have an aging population. Some places like here, we have a growing population, so you need a lot more healthcare services. But that is a sector we don't expect to continue to grow into the future, because who pays the healthcare sector is starting to pull back. So the federal government, as part of their HR1 that they passed recently, reduced the amount of payments going into healthcare, so the hospitals won't get paid as much as they did in previous years. Insurance companies, we've all seen in the news, have been struggling in the last few years, not making, it sounds crazy for how much we pay in health insurance premiums, but the health insurance companies are not making a lot of money. So then they're going to cut back payments to hospitals too. So the one sector that has been a lot in terms of employment nationally, we expect to slow down in that sector in the upcoming years. So the drawbacks are, manyfold in that sense that we have tariffs. And it's not just the tariffs, but it's the uncertainty around them. It's stuck forever at a certain percent. That's almost easier to deal with, even if it's a high number, because you know what it's going to be and you can make some decisions. But everybody at this point is basically waiting to see what happens. And I think that is the larger problem with the economy. It's too many people just sitting on the sidelines thinking, well, I don't know if it's going to be higher or lower. I don't know if I should go or if I should hold. And I think that is and the too many people waiting on the sidelines is how you get into problems.
Yeah, absolutely.
Quickly. So
it seems like another stat that I saw recently was that maybe we're at the highest amount in savings, I guess, or in high yield savings or something like that ever. I don't know. Have you seen a stat like that before?
I think the personal savings rate is maybe not that high anymore.
Right. Yeah.
But
money markets maybe and stuff like that is.
And I think that just tells you people don't know what to do with their money.
Right. Waiting
so much uncertainty.
I think it's interesting that how NWA is so different from the rest of the country. Like you mentioned the healthcare industry pulling back, but here we are between, huge facilities and like expanding our medical presence in NWA. Why do you think NWA stands out from the rest of the region on that?
So these are investments based on like past growth, right? So we still have population growth, and so we don't have as much of an aging population. We do have something of an aging population, but a lot of people here are younger. The median age here in Northwest Arkansas is younger, so you don't have a lot of healthcare services from that perspective. But more people is just more healthcare. People have children. Children need healthcare regularly. Also, just most of us need 4 eyes to look at things these days. So you need to go to the doctor once a year to get your eyes checked. You go to the dentist twice a year to get your teeth cleaned. That's just more services because of a growing population. But they're not immune necessarily from the bigger changes in the health insurance sector. So fewer people carry health insurance into the future, and that's going to affect our hospitals too. And then the state payment changes that are going through, and then federal payment changes are going through, that will affect the hospitals here as well. But to make any of these investments takes forever. You make a decision, you want to get an investment, and actually build the thing takes forever. It's not. We don't build things fast in this country, which is a different pressure that we should talk about at some point. That's the investment we're seeing were meant to deal with growth that had already happened.
Yeah. It seems like what you're saying is, population growth is really the driver of a lot of what's happening in Northwest Arkansas. How do you, this may not be something that you've studied or as part of the study that you do, but how do we stack up when you look at other areas that are having really solid migration as well? And, what are some, I guess, indicators or things that we do better or maybe even do worse than, I think about like a Charlotte maybe, or a Huntsville, Alabama, places that you think about or have heard that are having similar growth or might be comparable to Northwest Arkansas.
Yeah, so we do this report once a year with the Northwest Arkansas Council. And it's called the State of the Region Report. And so it basically compares Northwest Arkansas to other regions. And we were comparing ourselves to places like Huntsville, Alabama.
Straight.
Places that are more like us in that sense. And we realized we were always doing better than them by most metrics. So then we decided we don't want to just, pat ourselves on the back. Say, oh, look how great we are. So now we compare ourselves to really fast-growing regions and regions that are often, double our size or much bigger than us, more than double our size. So we're comparing ourselves now to Austin, Texas, and Madison, Wisconsin, and Des Moines, Iowa, and Raleigh and Durham, and Provo in Utah. And so these places are all larger than us. They're all growing faster than us. And, so we don't compare as well those regions. So we do have some areas where we do well. Our unemployment rate is lower than most of those regions. Our employment growth rate is faster than most of those regions. But we don't grow as many new businesses as those regions. And that is probably because we have a lot of people working at corporations. And the nice thing about working at corporations is that we've talked so much about healthcare, so they provide decent health insurance, other benefits as well. So it's harder for people to leave corporate jobs and go to entrepreneurship because you'd be giving up quite a bit of safety net doing that. So we don't do well in that regard. But in other places like high-tech jobs, we don't have as many high-tech jobs as these places, but we're growing them faster than these places. So we're adding quite a few of those. And so those are sectors we're doing well in. And our overall educational attainment, since we've talked about the university, is lower than these places. So our peer regions, those ones that I mentioned, on average, they have half their population has a bachelor's degree or higher. Ours is at 38% right now. So we're doing well, a lot better than the state, a lot better than the nation as a whole, but not as good as those peer regions. So then that means our incomes are lower than those peer regions as well. The one metric we're doing better than them, which we shouldn't be, is our home prices are growing faster than those places.
Yeah.
So Austin and Provo are technically more expensive than us. But in terms of growth rates, we're doing so much that we're starting to catch up with their high home prices as well. So we have a pretty good way of looking at these metrics against these places. And those places are doing things right, which is why we want to measure ourselves against them. Places like Austin have built so much housing in the last few years that their rents have come down significantly, that they had people leaving Austin to move to Northwest Arkansas because things were getting so expensive in Austin. And now their rent's going down significantly, that they're getting people going back to Austin because, Austin's becoming more affordable.
Yeah, the Austin story is that, it's similar. There are some similarities of how fast they grew, and then how, they had this kind of drawback like the past couple of years of these rent and sale prices. Do you see that happening in NWA, or are we more in front of it than Austin was? Or
so in terms of building scale, how much Austin built in the last few years, we're not even close to building that, percentage wise.
Yeah.
So it looks like if you drive around a region, there's a lot of construction of apartments, but it pales in comparison to what Austin did in the last few years. So we're not putting that much inventory in the market all at once, and they did. So, from an investor perspective, not great, but like for Austin, the city, and for the economy of that region, that's great because like now it's like, hey, our cost of living is lower now. There were years when Northwest Arkansas was doing better than Austin in some of those metrics, like best places to live and something. A lot of that is entirely driven by cost of living, right? So you get a lower cost of living, you get a much higher ranking on those metrics. And so we're like, oh, we're better than Austin, largely because our cost of living was lower. That's the one thing they fixed, whether they intended to or not, but they fixed it, at least in the short run. So
yeah. How do we stack up? I'm just curious on this too, comparatively when it comes to, it feels like maybe there's a pretty big gap between where the median price for us is, or maybe where it's headed, compared to even like where our median or our average rent is compared to these other big cities. It seems like, just thinking about in Austin, for instance, their median price is probably well above ours. Their average rent is probably also well above ours. Their gaps, to me, would seem like it might be closer than what ours seems to be like. It seems like our average rent is still pretty low comparatively. Would you say that's correct, or would you say our average rent is, has come up to a point where
for our multifamily market, I know we slap the name luxury on a lot of developments, but it's not like compared to what's in Austin or some big cities, it's not really luxury developments in that sense. So it's just an apartment complex, right? So what we're building for this market is different than what you get in other markets. So like in Austin, your rents are higher in downtown cores in Austin because you can do a lot of things in the downtown cores of Austin without ever touching your car. So that justifies a higher rent.
Yeah.
And Northwest Arkansas is not like that. So we do have some downtowns. You can do some things without using your car, but by and large, almost everybody has to get in a car to get to work. And that's not true in some of those places. So those places can charge higher rents because you don't have transportation costs. And this is another metric that we look in this report. We measured not just housing costs, but housing and transportation costs. And Northwest Arkansas actually has one of the highest housing and transportation costs compared to our peer regions, which sounds crazy because you're comparing to Austin and Provo and these places. But because so many people there don't have to use transportation for as many things or cars for as many things, they have lower transportation costs. So what you're building here, often see it might have nice amenities in the place, but it's not, downtown living. We do have some. Downtown Bentonville, downtown Fayetteville, a little bit stuff going down into Rogers and Springdale as well. But the bulk of the apartment that we've built are basically, almost suburban developments, core city developments, which is why you don't get those prices. So there's stuff in downtown Bentonville, high price rents. You might, maybe not quite downtown Austin, but high enough to compare. But the rest of the apartments are basically suburban apartments. Mm-hmm. There are no amenities around them. Somebody might have built a sidewalk, but the sidewalk heads to a main road that nothing's on. You can walk to a gas station, maybe, right? Or the apartments right on the highway. Right? It's not a great amenity without a highway. It's like you open your balcony, you're breathing fumes and getting car noise, or you're overlooking, commercial development, parking lots or large retailer or something, right? I mean, so that's not the apartment that you're living in. In downtown Austin. Where you're looking at our downtown core, a lot of activity and things of that nature.
Got it. That makes a ton of sense.
The walkability is like such a buzzword, walkability, but it's really hard to have walkability. Like in some of the, the Bentonville, I can think of, the Howard, which is, walkable, but I don't know any other apartment that's truly, walkable to the square, walkable to your job, or where you can have we're not building very high in Northwest Arkansas compared to.
And so, it's hard to call. I mean, like the apartments are going in Bentonville and Springdale and Rogers and Fayetteville, and they're not suburbs or cities, but they're suburban type development. They're not what you would consider downtown apartment building, right? In most of these places. Fayetteville has a lot more because it's right by campus and student housing, but not seeing a significant.
It's cool to see what downtown Springdale, like it's kind of become, the big Emma, some of those projects on Emma are truly becoming walkable, which is Springdale, you wouldn't have thought that 5 years ago that you would have a walkable cool area.
Yeah, I think the interesting question too is, what absorption rate will look like for a lot of those downtown areas in Northwest Arkansas, just with, it seems like now ease of access to 49 is going to continue to be a premium and what people really want. But I'll be curious to see how that continues to, potentially shift to be able to walk to dinner or walk to, things to do downtown Springdale, downtown Bentonville, things like that. And just how the cities too are adopting those projects, I think is really interesting. So,
and then getting enough people to where, importantly, most of the commute is to work back. There's a recent report that the Regional Planning Commission did looking at bus rapid transit, right? And so you could end up with a situation where it's a lot easier to get to work if you're not driving yourself on I-49. You could do any number of things, listen to a podcast, pay attention to a podcast to the road. These days, people seem to be paying attention to the podcast more than the road, but it's a different problem. But there are ways around that where you could get more downtown living and a commute to work that is less painful than what we have right now. Because, people do value the ability to get on the highway really quickly, but then they're not willing to pay for the apartment because that is not considered, like, being next to I-49 is never going to be cool.
Yeah, absolutely. So just thinking about the State of the Region report that you mentioned, I know Northwest Arkansas Council, and then is it the University of Arkansas as well that partners together for
so Northwest Arkansas Council, which obviously is the regional chamber made of the largest companies here in Northwest Arkansas, and then the University of Arkansas has partnered on this report since 2011. Basically, when the council came up with long-term development plans or economic growth plans for the region as a whole, we decided that it's probably good to measure how we're doing.
So I think thinking about that with each of those metrics that you all track on there, what do you feel like is the area's biggest priority on that list? I mean, what are some of the biggest priorities? I know you mentioned median income is part of that. You mentioned a few others, but what do you feel like is leadership in Northwest Arkansas, their biggest priority when it comes to, I know they would say all of them are their biggest priority, but to you, what are their biggest priority, and what are going to be real good drivers for Northwest Arkansas long term?
I mean, I think so. Everything sort of falls in this large bucket of supporting growth. So whatever we're doing, we want to continue to support the growth that we've had in Northwest Arkansas. And that means that, for the companies that are already here, providing a pipeline of talent. So bringing in people, like I said, just people moving into Northwest Arkansas have had higher educational attainment, and that's raised incomes here in Northwest Arkansas as well. So bringing in those people to Northwest Arkansas, continuing to make this a place that those people want to come to. And that is, because it's an investment in all kinds of amenities for what people want to do with their free time, but also, making sure that housing does not run ahead of what people's incomes are, which for a while there in the 2020, 2021, home prices skyrocketed when incomes were not going up nearly as much as they are. So making sure that remains affordable is a huge component. But then also growing new businesses. So we have a lot of businesses. We have 3 Fortune 500 companies with the University of Arkansas. We have all the companies, major companies that work with these 3 big companies, then all the companies that work with all the companies that work with the 3 big companies, and so on. But we also want to grow new businesses here in Northwest Arkansas. So we've had Walmart, we've had Tyson, we've had JB Hunt. We've had some other successes from startups, but we want new startups. We want the new big Fortune 500 company to be built here in Northwest Arkansas. And that is an area, as I mentioned, that we struggle with because we can't get people to leave their safe corporate jobs with nice benefits and things like that to take a chance, go without health insurance and vacations and all of that for a year or 2 years and build a new company, right? So it's a little easier in some of these other places where you don't have as many good corporate jobs for the size of the area, and we do. So That's a little harder, but we are working on that. We have a lot of different entrepreneurship programs at all of our schools here in Northwest Arkansas. A couple of good VC programs combining the talent in Tulsa and Northwest Arkansas, so you have a larger region, a larger pool of projects that VCs might want to look at. So there's a lot of effort gone into it. The results will come. Mm-hmm. We have yet to see the significant results from that, but they'll come.
Yeah, by VC, Melissa, he's talking about venture capital, and I definitely have seen that a growing area in NWA. I think that's super important. As you mentioned, the golden handcuffs is what I call it. The corporate veil of all the benefits, and you're making above median income, so it's hard to take that jump. But it's interesting to see the amount of money pour into the venture capital space and get incubate. There's Startup Junkie. There's what the University of Arkansas does. And then a couple other groups. So,
people want to do these things, but golden handcuffs are. But so during the pandemic, when the federal government was just handing out money just freely, the average Arkansan family could have gotten something like $14,000 from all these different programs, right? So we saw a huge increase in business growth, people starting new businesses in that time, because there was this large sum of money just given to them.
In time, I assume, right?
Yeah. And then you're like, oh, maybe I can take a risk because I have this pool of money sitting around now. But, so that helps people get out of the golden handcuffs. But outside of that, it's kind of really hard to convince people to give up something safe and start something risky.
That makes sense. I think one thing you mentioned in there was just talking about the University of Arkansas and how that has effect on our population growth and things like that, median income as well, and how that continues to rise. How do you see us stack up with other big college areas? Again, we keep mentioning Austin, but Austin obviously has the University of Texas at Austin. How do we how well do we retain students that graduate from the University of Arkansas compared to, I guess, other cities like that?
Yeah, we do retain, a good chunk of students. So obviously, if they're coming from all of these different places, fact of the matter remains that most people are averse to moving, which sounds weird to people in Rochester, Arkansas, because there are a lot of people here that moved from other places. But these places are rather anomalous in that sense, because like 90% of people, the most they ever move was for college. Yeah. And that's it. So they go to college and then go back home. So, it is unreasonable to expect us to keep a large chunk of people that came here from other places because they came here from home. They went to college. That was the time they left home, and they're going to go back home. That's a great stat. I think it's like 90% of the country lives within 3 hours of their mother or something like that. So it's people don't like to move.
Yeah, that makes sense.
So, we do keep some people here. But even if they leave, they come to college, they go back home, they do whatever. This at least is now a place that's on their radar because they enjoy their time here. Mm-hmm. And unlike other college towns, there are other things here. So, pick on College Station, Texas A&M, good school, not a great place in general, from what I've been told. I've never been. Or Lubbock, Texas, so places like
Miami of Ohio,
yeah,
like Oxford, Ohio, or Athens, Ohio. There's a bunch of that's all it is.
Yeah, so it's a great place when you're in college, but not a whole lot of things outside. So like UT Austin, you're in college, but you're also in this great town. And I think that is something that people enjoy about here. So even if they leave and go back, they might come back for a job opportunity a few years down the line. Wherever they call home, as they might move here afterwards. But again, you have to remember that the people that move are different by and large than people that don't move, and people that don't move are the norm. So couldn't keep everybody that went to college here.
How do you see with all this population, how do you see our region expanding outside? On the Skyline Report, we have Fayetteville, Bentonville, Rogers, Springdale, and Siloam Springs. Do you ever see another? Siloam Springs kind of on the outskirts. Yeah, I asked Jeff when he said you guys used to do Fort Smith, but it's not NWA, but that's a separate topic. Do you ever see like a Farmington or a Pea Ridge or a Prairie Grove?
I mean, I think so. You were seeing so much growth in some of these small communities that you might have thought that we would have gotten to, much larger population center, but they've all hit the same problem through water and sewer infrastructure. So as it turns out, you can only build as many homes as you can flush toilets. And once you hit the limit of how many toilets can be flushed at once, that's it. You can't build any more homes. So, that is a growth challenge for the region because like in the last decade and a half, most of our population growth has happened in the smaller communities. So it hasn't happened. So yes, the big 5 cities have grown. The big 4 cities in particular have grown a lot. But a lot of the growth has been taken up by the smaller communities that are not in this I-49 corridor. And they've all at the same time hit infrastructure issues. And the issue they have is that they do not have the taxing capacity to build new infrastructure. So these are all largely bedroom communities. They might have a small grocery store or gas station, fast food restaurant or something, but not enough of a sales tax base to build new water and sewer infrastructure. So the only places that have that infrastructure or that bonding capacity are the big 4 cities, larger, we include Silent Springs as well. But they don't have the same infrastructure crunch as the big 4 cities and the smaller cities. So necessarily over the next decade and a half, our population has to grow in the bigger cities because that's who has bonding infrastructure or bonding capacity to build new water and sewer infrastructure. So the city of Fayetteville has a new bond offer coming up in March. Citizens have to vote for it first. But the biggest chunk of the money is going to building new water and sewer capacity in the cities that, you can build more development. Bentonville is going to be borrowing money here soon to build new water and sewer capacity. That will open up new parts of Bentonville for development and invest in capacity in existing parts as well. Springdale has to do that as well going forward. And that will get you a lot more building in the cities. There are some regional efforts to help the smaller cities get new water and sewer capacity. But coordinating that is obviously a little harder. So a lot of small cities with varying interests in all of these things. But, Centerton, Cave Springs, all of these places would like to grow, but they can't as much because they don't have water sewer capacity to go along with that.
That makes sense.
What's your take on Fort Smith as far as the economic region grows?
I think we could say that we probably reached bottom some point in the last several years. They're slightly on the uptick, but they're not anywhere like they were before the 2007 recession. And so they've had some growth there from the air base that's the new air base operations that are coming to Fort Smith. There's some manufacturing capacity there that continues to be invested in, but it just doesn't have that sort of driving growth that you have, sort of automatic growth that just generates its own growth. The airbase operations are important. They'll bring people in, but again, it's not a very large number of people, so you get that with a lot more businesses that go there. That's something that we haven't had a lot of success yet in. So there is some amount of commuting happening from Crawford County, so not Sebastian County, just north of Fort Smith, Crawford County, because that's immediately south of Washington County.
Is that Alma area and stuff like that?
Van Buren, Alma.
Yep.
So people, again, can get right on 49, come up to Northwest Arkansas. So long commute every day. So if you have some of those hybrid jobs, it might be more bearable, but
yeah. Do you ever see, in your opinion, do you think Northwest Arkansas, as it continues to grow, obviously it seems like a lot of these cities that are continuing to have growth, like a Farmington, like a Pea Ridge, stuff like that. My guess, my hunch would also be the fact that obviously they don't have the capacity to build as much in the major 4 cities, but people are chasing affordability. And I think, we live in an area too that, and obviously I don't have a data point. I know you're a data guy, but I think our area is and maybe this is a thing in the South in general, but most people still want the American dream of owning a home and things like that. And so I think therefore a lot of these areas are going to continue, all these cities that are surrounding are going to continue to grow because they're more affordable, but they can still be in Northwest Arkansas, stuff like that. Do you think that's the case? Do you think that'll continue to go out because of factors like that even?
I mean, I think to a certain degree it will have to, because the big four cities just can't build enough, as much as we'd like them to absorb all the housing growth in Northwest Arkansas, they're not going to. So you got to be realistic. So the smaller cities are going to continue to grow, but they probably will not grow at the rate that they grew in the last decade and a half, just because they don't have the infrastructure to grow that way. And I think also, people might want to own a home, but they don't necessarily always want all that space and the maintenance that goes with it, particularly. So I think you see people, especially in the last several years, have bought houses larger than they wanted to, because household sizes have gone down. But then the only houses on the market were like 3-4 bedroom houses. So you have 2 people buying a 4-bedroom house. Like, what are you doing? This was what was on the market. And the mortgage rate was too low to just not buy. So we bought. Just sort of the other crunch, right? So you bought a starter home and then moved to another larger home. And nowadays people are just buying the last home they might ever need from the beginning. So there's that whole, I think people want largely, still to own a home. And we can interrogate whether that's something we should all aspire to or not in the future. But I don't know that they necessarily want like an acre, a long commute, because part of the appeal of living in Northwest Arkansas is the ability to do all of the things. And so if you have to go to work so far away from your house and then drive back, you're not going to get back in the car and go back out again to another downtown to have a drink and a meal, because you just did that commute.
That made me think of Bella Vista. I feel like Bella Vista could be, with how much the Waltons are putting back into Bella Vista. Like I could see that, and what you're talking about, home, like smaller, nicer homes are being built in Bella Vista. People.
Well, it always had this sort of very compact feel to it because it was built as a retirement community. So they wanted the retirees to get to all the amenities very easily on a golf cart, preferably. So it kind of was built in a way, or the town was structured in a way to be this kind of development. Smaller homes, a lot easier to get to your amenities, which may not be the golf course, but at this point,
it's all mountain bike, the mountain biking park they're building.
So that is a lot more. And so, Bella Vista has this weird dynamic where you have a bunch of retirees and then young people that are wanting schools and school districts, and older people are like, I thought this was a retirement community. Why you asking me to pay for schools? So that is a lot more appealing, I think, to people than living, 45 minutes from the corridor, which is basically then 45 minutes from anything you might want to do or need to do.
Yeah, that makes sense. So we're kind of getting near the end here at the end, and obviously our listeners are a lot of investors in real estate in Northwest Arkansas, or want to invest in real estate in Northwest Arkansas. They're hearing a lot of this, the talk about, how resilient we are, and, what kind of bubble per se that we have around our area compared to other areas in the country. And so just as I'd love to kind of wrap it up in more of a real estate sense here, just looking at, some of the things that you have in your Skyline report with the multifamily pipeline and how absorption rates have looked, vacancy rates and things like that. How do you see, kind of when you look at Northwest Arkansas compared to others, what are some of those key indicators, I guess, in the real estate space that you think we have an advantage of over other cities out there, I guess?
The one big thing that, we haven't talked about is the office space vacancy rate, which is insane how low our office space vacancy rate is in Northwest Arkansas compared to everybody else we compare ourselves to, or just nationally. So we continue to build more office space here, and our office space vacancy rates continue to be really low. And nationally, office space vacancy rates are in the high double, 20% nearly, or thereabouts, depending on what market you're looking at. And so much of that is tied to the fact that our region is still a lot more compact. And so, 73-ish% of people drive fewer than 30 minutes to get to work one way. Some of our peer regions, Austin, it's like 60% or something. And most of our peer regions might be a little bit lower than that as well. So, nearly 3/4 of our population is driving fewer than 30 minutes to get to work. So in those cases, people I think like to see other people. Remote work being what it is, hybrid work, and also people would like to at least work hybrid, but they're not going to want to continue to do it if they have to commute an hour each way to be able to go, right? So you can very clearly see there's a very good relationship between how tight some of these communities are, how dense some of these communities are, and their vacancy rates for office space. So the places that still have really high vacancy rates, they're places with long commute times. So people would like to go to work with other people. They just don't want to. Going to work with other people does not mean sitting in a car for an hour.
Yeah.
Driving on an open road and you're out in a national park, great. Driving on I-49 in traffic, not great. It's work on top of doing work, right?
Yeah.
So people don't want to do that. And I think, making sure that our future growth is aligned to the way people live right now. So why people come here that are not in big metro, they're like, I don't want to live in Dallas. I moved from Arkansas. Well, because in Dallas, you have to drive an hour to get to anything. They don't want to do that. So if we end up developing the way Dallas did with this suburbs and suburbs and suburbs of suburbs, then you end up with the same commuting patterns that you had in Dallas, which is what people left to be here. They want to be closer to their work, closer to the amenities. They don't want to just drive to work and drive home and then be stuck at home because they've done their drive for the day.
Absolutely.
That's exactly what we had Mayor Orman on and Tyler Overstreet with Bentonville. And they were talking, this initiative to have, they have the Bentonville Square, but they're trying to have more Bentonville Squares in Bentonville. So it's exactly to your point of being, commutable. It's one thing to be walkable, but another to be drivable. Makes a lot of sense.
Absolutely. And you mentioned, so I personally think vacancy rates for my investing is like the number one factor that I think is important to me, because historical vacancy rates, that is, and just looking at Northwest Arkansas as a whole for the last 10 years, let's say even, our vacancy rates have been, in multifamily specifically is what I've focused on, but have been low compared to national averages. It seems like you mentioned office rates being significantly lower than others. What are some other sectors in Northwest Arkansas, multifamily, industrial, warehouse, stuff like that? Are they all seeing super low vacancy rates, or what's?
You wouldn't have thought this, but like the retail vacancy rate is fairly low in Northwest Arkansas, which is insane because we have a lot of old retail space still. And so occasionally one of these whole big box stores will go out of business because it was well past their time. But and then the vacancy rate might pop up a little bit because it's a large big box store that went out. But broadly, we've added new retail space in a lot of our downtowns, and I am not much of a shopper in that sense, but like they seem to be. People keep putting these little boutiques all over the place, and they seem to, people are in downtowns and they're happy to go in these shops and purchase things from them. The other sector is warehouses. People have built a lot of new warehouse space, and warehouse vacancy rate remains extremely low in Northwest Arkansas because, again, the whole thing of people shopping online, you still need a lot of warehouses close to people to be able to deliver goods to them in a speedy manner. So you still have a lot more warehouse development as well. So the multifamily vacancy rate has been under 5% for a very long time in Northwest Arkansas, and has gone up like 1% to 3% in the last few years. Sounds terrible, but like, come on. But I think the rent increases have slowed, so that in case there's some, it's not growing 10%, 11, 12% as it did in previous years. So there's a little bit of softness there. And then, people offer discounts like free rent, 1 month free rent or something like that, which is doesn't show up in our metrics as a reduction in rent. But it is a reduction in rent in that sense. But
Okay, that's good. And I just like that sector, because I feel like, especially if you look historically, Northwest Arkansas being as low vacancy rate as they have been, you can feel strong about an investment in a piece of real estate in Northwest Arkansas, knowing that, the vacancy rates are they've had a history of being very low.
well, I think people have more choices in renting now. Didn't used to be the case when we had 1% vacancy rate, right? People are just like happy to get something. And now they're happy to shop around a little bit, be for a lower price, but also in nicer locations. So now I was talking about some of those developments looking like suburban developments. So you have two different options. And I might actually live closer into town. Instead of, since I'm living in an apartment anyway, I don't own the space. Why should I live out where there's nothing around me? But I can pay either slightly more or the same amount if rents are not growing as fast. If the unit is older, at least I can buy stuff, right? If I'm going to have to live in an apartment, might as well live near things.
Yes,
So
absolutely. So just as you look at those factors, vacancy rates, average rents, things like that, I know you're an economist. I don't know if you're a real estate investor or not.
I stay clear. Yeah.
But I would love your take on what cities that you would be, if you were a real estate investor, what cities would you be most excited about thinking about those kind of metrics going forward?
Here in Northwest Arkansas, I think our downtowns are sort of, downtown Bentonville seems like hard and really expensive to develop in, but they are thinking about developing new downtown. So I think our cities are seriously underdeveloped. Like they all have one small downtown, geographically. So we compare ourselves to these other very large cities. No place in Northwest Arkansas is a large city. So our largest city is 100,000 people, which is one of the smallest cities in the surroundings, tri-state area, if you will.
Yeah.
So Mississippi has smaller cities than we do, and that's it, right?
Yeah.
Those are the larger cities. Oklahoma has larger cities. Missouri has larger cities. So our cities are seriously underdeveloped in that sense, so that whatever development is like in one spot, and that we need more of these downtown cores throughout the cities. So that's the areas that, if you're thinking about Fayetteville or Springdale or Rogers, the only developed looking part of the city is like downtown Fayetteville, Emma Avenue, downtown Rogers, downtown Bentonville. But there's so many other intersections where a lot of other people, a lot of good population density, traffic density, and all of these things that at this point just don't have housing, amenities, anything else. It's just like a big, traffic light, 8 lanes, and nothingness there. That's the real development opportunity in all our cities, to build more cores closer to where there are already people, and getting more. We need to get people to, not drive to work and drive home and then call it even.
Yeah,
we need to get them out. And building stuff closer to them, one way to do it.
so it sounds like
Everybody can live in downtown Bentonville.
right, but it sounds like for you, that definitely was an economist answer there for sure. But for you are most excited about what's happening around the downtown areas in each of the big 4 cities. It sounds like.
Well, I'm more excited about the potential in the non-downtown area. So like you have these major intersections in all our big cities that are currently strip malls, massive traffic lights, and cars passing through, but not people.
Yeah, that makes sense. So just as we wrap up here, you've heard a lot of metrics out there if you've paid attention to Northwest Arkansas at all, but we've heard there's 32 people moving here per day, should be at 1 million population in 20 years. Are there changes to that? Has there been changes to that? And where do you see?
No, our population growth has been consistently pretty strong, 2.5% growth, closer to in the last several years. So you're, sort of that 30 people a day moving into this region. That's significant. But that's, again, our population growth stats go to 2024. I have no reason to believe that's not true in 2025 either. And yes, if the population growth continued the way it is at this point, in 20 years, we'll be 1 million people, but that's not a guarantee. Right? I mean, just because our population grew 2.5% every year for the last few years doesn't mean it's going to grow 2.5% every year for 20 years. So we need to continue to invest in this place to make it a place that grows 2.5%. And that 2.5% is harder to achieve the larger you get.
Absolutely.
So 2.5%, 600,000 people. 2.5% on 700,000 people is a whole lot more people. So that growth rate, to sustain that growth rate, we need to continue investing in infrastructure, amenities, new housing, all these things.
Absolutely. I love that. Another quick rapid fire question. What do you see the likelihood of another rate cut towards the end of this year?
So I would say that this rate cut that they made last week was done blind, and it was sort of risk management. Their language indicates largely that was risk management. They were uncertain about the state of the economy, and they thought it was safer to cut than to not cut. I don't see how they make two blind decisions. So if the government remains shut down well into November, like closer to Thanksgiving, I think the chances for another rate cut in December diminish at that point. Because I think if the government reopens anytime the next week or so, you're more likely to get a little more data, at least looking at September or something. And I don't think the data looks great. So I think it would justify the employment growth and so on and so forth. I don't think the private sources that we can cobble together don't look particularly great at this point. So it's likely that if we get new data, it would justify another quarter point rate cut. But it's hard for them to make two rate cuts in the blind because they're literally making it on no data. So the longer the shutdown lasts, I think reduces your likelihood of a rate cut. If we do end up getting more data, we'll probably see another quarter point. So I'd say about 60% at this point. A chance that we get a quarter point in December.
Love it. Last one here for investors listening to this. What do you think your one metric that every investor should track what those Arkansas should be?
For real estate?
Yeah.
I'd look at, two metrics, actually. Population growth and then the vacancy rates.
Well, Mervin, we appreciate your time. We're super grateful. We know you're a busy man and your time is valuable. So we're thankful that you spent some time with us. We're super grateful for the Skyline Report that you work on and your team puts together. And if you haven't had a chance to take a look at that, we'd recommend taking a look at the Skyline Report 2 times a year. But yeah, we're grateful and we appreciate all the nuggets you had on here. So
happy to do it. Thanks for reminding me.
Thanks, Mervin.
Yeah.
Thanks, Mervin.
Again, thank you guys for tuning in. I'm going to go ahead and list some sponsors off here. We're going to start with Whinstone Private Lending. This episode is brought to you by Whinstone Private Lending, one of the top private and hard money lenders now serving Northwest Arkansas. Whether you need short-term capital for a flip, a bridge loan, or creative financing, they've got you covered with very flexible products to fit nearly any deal, including 100% financing. What sets them apart is their deep expertise, fast response times, and ability to think outside of the box to help investors like us close quickly and efficiently. If you're looking for a real lending partner, check out Whinstone Private Lending. Link is in the show notes. Our next sponsor is Advantage Title and Escrow. They're a local company. They do great work. Specifically, Kayla Phillips. I can speak personally on this sponsor because I use Kayla for all of my transactions. It's been 2, 3, 4 years now, and Kayla and I have done a ton of deals. We probably do between 65 to 80 deals a year together, and they do a great job. The SOPs, so systems and processing that they have over Advantage Title is just incredible. Clients love it. They do a great job from start to end communicating. When I give a deal to Advantage Title and Escrow, I know that it's going to be taken care of. There's no second guessing. I almost am able to treat them like a second transaction coordinator to my transaction coordinator that I already have. I know that they're going to handle the systems and processes correctly as an agent, as a homeowner, as a buyer or seller. They do an incredible job of handling a transaction and communicating throughout the process. They do a great job with communication, especially Kayla Phillips over there. I would highly encourage you, if you're looking to close on a home, buy a home, if you're an agent listening, to use Advantage Title and Escrow, specifically Kayla Phillips. So you're going to reach Kayla best at 501-358-1601, or you can email her, Kayla, Cayla, at goadvantagetitle.com. Advantage is ADVANTAGE title.com. If you enjoyed the show, make sure to give us a follow on your favorite podcast platform so you never miss an update.
Don't forget to connect with us on Instagram, Facebook, and LinkedIn for more real estate insights and behind-the-scenes content.
Have a question you want us to cover? Send it our way. And if you're interested in sponsoring the show, visit nwainvesting.com to get in touch. Thanks for listening, and we'll see you next time.